Hello friends, good week. Vladimir here with you, and this is the 1st March 2012 weekly review. Well, what did we have on the previous week, and what are we going to have on this week? We discussed about the extreme levels for the yen pairs. We discussed about the Swiss yen that might start the retrace from this resistance or the next one around 93. We discussed about New Zealandian yen and its 68 area. We discussed about pound yen, we discussed about all of them, and of course the dollar yen, which also bounced here from the previous resistance, made the first correction to the support, right here, this support area, and retraced up again. But it's still extreme, still there, and now it's even more excited, and I will explain why. If we just started to talk about the yens, let's take a look here. First of all, we have had a Marubozu on the previous week. After Marubozu, we get a correction. Almost 90% success rule, you know that, right? We get a correction and we get a continuing move up. Now pay attention. For the weekly review, we have clear trend line. Not just that, if we pay here an indicator and a moving average of 100, right? Simple moving average. You can see that the price is almost reaching right here. Wow. We also have here, as you can see, not just that, but this resistance has been broken, right? The previous resistance. Now we have this resistance area around 81.70, and the next one is this trend line, right? Very extreme situation. Pay attention for the Bollinger Band. It's almost going now. Sorry for that. Just a second here. It's almost here going for a duplication. Very soon it's in duplication. RSI might reach the extreme area as well. And not just that, the hedgers, the hedge traders are looking to sell and to buy the yen as a currency. We go now back for daily chart. Daily chart gives us some amazing thing. A straight move from a band through a band for double duplication almost. Right? One. This is the first, so not exact here. And here. This is the one, and here we go. 1 and 2. Almost double duplication. We have the next resistance around, you see that here? This is the area around the 82. The next resistance area just right here on the duplication. It could go through duplication. We have 83, 84. Each 100 pips is clear psychological area for the dollar yen. And from my point of view, this RSI extreme right and the current divergence that is being built right now will give the dollar yen the final rise. Now the rise could get a move from here, or could play around, go little bit higher even, and then begin its fall, retracing down. So from my point of view, dollar yen, any up move we get is just for the higher sell. That's all. I think that the dollar yen pairs is about to retrace. It should have made a move from the first resistance with the duplication and the extreme. It only did a correction and retest. That's why it requires the big correction, the big down move here. And it could happen if we take a look here. 1, 2, 3, current 4, and 5 being builded. Now even after 5 moves, normally we get an A, right? Maybe shorter A, then a B, and then a C. And from my point of view, these moves should take us once again from higher to the low, to below 80 area. I would bet for 79 at least, but below 80 would be more conservative target. And this is for the dollar yen. Swiss yen, same story. We have an extreme ride right now, but it's playing, as you can see, around the 200 moving average. This play could break below the 200 and the support, very strong, very stiff area, could break through and go for the 200 moving average, which is below 88. But if it returns up, then we are going to have the final move for around the 93, 94, somewhere in between, with a new divergence to be created and a new RSI divergence on the extreme to be created before the next stiff down move. If we count moves, we have 1, 2, 3, 4. It could be a 5, or it could be 1, 2, 3, 4, 5. That's why it could be very misleading, as the move counting here is confusing. Based to 4-hour chart, this sideways move and the possible bullish divergence within this sideways move could hint on a possible up move, the last up move, for the next divergence to be created, as we discussed, and then a down move. Anyway, we follow this pair. We discussed on previous Morobuzu as a possible entry, still in. So if it does go higher, that will be a good result. If you're in, protect with a break even, or take the money or take the profits and wait to see what we are about to have. Maybe break below 200 moving average will open the doors, as we discussed, lower below the 88, or if it does go up, then the 93, 94, this stiff resistance would be the final stage for a break, for a crush. Follow this one, New Zealandian yen. Oh, this is an amazing pair. First of all, finally it makes the stop. Finally it's been triple RSI divergence on a resistance, but take a look here. The harmonical pattern is a little bit higher. So it could spike once again higher above the 68.50. It could spike even the 69, but the down move should begin soon. Take a look how tight this indicator here. Very interesting things about to happen. And as I said not once, from my point of view, it's going to move like this all the way to this trend line. So it's going to be very, very, very interesting period for this pair. I recommend shorting the New Zealandian yen for long run, of course. Let's take a look on some more interesting pairs. Euro pound. Euro pound is, well, a mystery from my point of view. First of all, it bounced from the trend line, right? This trend line, and could build right now some channel here. It could be a flag during a down move, and that's why a break below 08250, from my point of view, will open the doors for this pair to go all the way for the 081, and maybe even the hedge company traders target 080, this resistance. By the way, I am bearish with my expectation here, but I think we might see some play around before. I will explain why. Based on the intraday, as we can see a little bit play, like from here, or first of all a down move, then a play before it stops and make the whole big down move based on the weekly chart and based on a possible daily break here. And if it does make the break below this area, right, 08250 as we discussed, why 50? Just to prevent any possible spike. So break below this 50 should open the doors to 081 and 080 maybe as a final target. Stay tuned for this one. If it bounced from this line and from the support and go back through the resistance 084, then we can consider longer up move to 085.80, 086, which will be the 200 moving average. And this is very, very, very interesting pair to follow, definitely. About the euro franc, I don't have anything to add. This pair being just based on the intervention, nothing new there. Take a look on the New Zealandian dollar. This pair is being extremely interesting right now. We have a stiff support area around 08250. 08250. Based on the daily chart, right, we have here a possible break below. A break below this on daily chart, friends, break below this area with a cross down of the stock of the RSI, sorry, of the 50 down on daily chart, and we are going down. How low? Possibly for, first of all, for duplication to 081 or even below, which is the 200 moving average. This down move could take with it the New Zealandian yen also for some writing down, and that's what we are looking for. New Zealandian should go lower. The same with the Australian dollar, which has here a clear double top, and now stochastic is crossing down. To make it clearer, if for aggressive entry it's okay to enter right now. For conservative, we are for a break below this 106.20, 106.10 to aim a duplication that should take us to 104, a duplication and a break of the RSI below the 50. A breakdown here below this support, right? An RSI breaking the 50 will open the doors to 104 as a target. For aggressive, you can enter right now with a stop loss above this high and look for this correction. As we discussed not once, and I said not once, I believe the pair is about to correct, and I think that somewhere during the middle of March it should go to the current area. This is my expectation for this pair. Pound dollar also very interesting situation. It broke the 159, stopped on below 160, made a daily divergence, made a bearish hammer right here, and a bearish engulfing in the last candle with a divergence on any of the indicators. From my point of view, this is very stiff sell call, and I believe you should take the risk here and the chance here to sell the pound dollar with the first target around this support somewhere below 157, and the second target should stay open as the pound dollar might go and duplicate itself all the way for the, hold a second, it's not the right line, for the support area. It should be very good pair to follow for a duplication, right? If you want to be conservative, go for the 4-hour chart. First of all, on 4-hour chart, it could be head and shoulders. It could build here some shoulder around, right, and make the down move since from there. And I would say about that as long as it keeps being below the 159 again, from my point of view, it's bearish. As long as it keeps below 159, from my point of view, it's a bearish call. Look for the pound dollar, it looks amazing. Alright, we continue forward, we move forward, and we have, of course, the indices and the commodities. About the gold, I think we are going down, and as long as the daily chart holds below the 20 daily MA of the Bollinger Band, I think the gold should go lower. This divergence made the effect. Gold crushed one day. We enjoyed this move on the live trading room, and now it could play around. I think that first of all we will go and test the 200 moving average, which is around 1670, and then it should move lower, but let's see how it behaves. Anyway, break below this 1670 should open the doors for lower moves to 1620, 1610, and then maybe, who knows, maybe based on the weekly chart even for new lows, who knows. But let's aim first of all for a short target, which is the 200 moving average. Break below that, then 1610, 1620, and all this as long as the daily 20 MA holds. Very important. And about the indices, no news, very extreme. Weekly chart being overbought already for all of them, which guarantees a stiff down move very soon. The question is when exactly it's about to start. Well, let's see. All the eyes will be moved to Greece and the European issues, of course. We are on March, which should be the most important month for Europe. This week is NFP week, and also very important week because all of the countries, Australia, New Zealand, Europe, and Britain, all will vote for the interest rate. Pay attention for that. It could be very volatile week because of the news. That's my expectations, friend. Keep small risk on this sensitive 2012 year. It's not a regular year. It's not regular moves. It's not something that you can see and you see on any year. It's different, and respect that if you want the market to respect you back. Thank you very much for your time watching this video. I wish you a beautiful week and good profits. Thank you. Bye bye.